Hey everybody, welcome to the Curzio Research YouTube channel. I'm Daniel Creech, research analyst here at Curzio Research. Thank you for tuning in. Today, I'm going to be talking about credit cards and why I don't care if you're 18 or 80 plus. You ought to have a credit card. You ought to use it a certain way because it benefits you. It puts your money to work for you. And I look forward to this discussion. Now, credit cards can be controversial. And let's just dive into a few stats. I want to paint this environment or put the context in matters here. So let's just do a couple searches on the internet. We can use AI or whatever. We can look at the average credit card balance. And depending on what source or what you're looking for, these numbers, again, don't get caught up in the details. Not that they're not important, but we want to see the macro view here. So I'm going to round for some numbers and examples, but the concept here is correct in that you want to put yourself first and spend your money as beneficial to you. So this is from some AI. I'm just throwing this into the old Google machine. Average credit card balance in the U.S. is around $7,300. That was Q1 of 2025. They gave you some stats. That's up from last year. You can see Forbes going back to April of this year. This breaks it down between generations and age groups. So 79 and older had an average credit card balance of $3,300. You can see that there. So my point is that they're all, they're different. You're going to find different sources with numbers, but let's just say $5,000 to $7,000 seems about normal. And then you can look at the average credit card interest rate, and you're looking at around 20%, 21%. You can see here from Lending Tree and different ones, some go as high as 24.8% or 27. Well, anyway. Now, I understand that people can be very triggered with credit cards. So let me say what I'm not saying. If you're in credit card debt right now, so if you are one of the averages that have, say, $3,000, $5,000 or more in credit card debt, I encourage you to stop digging that hole. So stop spending to go further in credit card debt there and work on a plan to get out of that debt. And listen, things happen. You may have taken a risk and it didn't work out. You may have just spent silly and now you got to pay for it, whatever. Been there, done that. Okay. I'm not judging you. I'm not throwing stones at you. Look, I got no rocks in my hands. I'm simply saying I've been there and done that. I tried to take a risk. I was in a different position in sales, thought I could make my way and earn income and then offset with credit card, got into credit card debt, had to get out of it, pay it back, etc. It's tough. You don't get into it overnight typically, so don't have the mindset you're getting out. Depending on the feedback, Daniel@CurzioResearch.com. If you want some ideas or strategies on maybe how to get out, let me know. Maybe we'll do another video. But the point is, if you're in credit card debt right now, stop spending on that and get a plan to get out of that. It's emotionally draining. It's just a negative situation, and it continues to compound and keeps you in this harmful cycle. And that's going to impact your decisions, everything around your financial statute. So don't do that. Stop doing that. And then get to a point where you have a credit card that you can use. And here's the key. I want you to use your credit card and spend whatever you put on it and then pay it off every single month. So the trick here is, and the glaring obviousness here is, you want to use it to your advantage. So the credit card company is going to loan you the ability to use their card and money, and then you're just going to pay it off every single month, okay? So it doesn't matter. It doesn't matter what the interest rate on your credit card is or anything. If you're never paying the balance, then that's the key there. So let's go over a quick example and look at a couple things here. So this is from going over to CNBC, going back to April of this year. And here's one of these crazy examples because money is emotional. And so if you have, say, the average of $3,000, $4,000, $5,000, $6,000 in credit card debt, you always have the option to pay off the full amount, pay off a different amount, or pay the minimum. And typically that's 1%. Depending on the credit card, it's at least 1% of your balance or a different amount, whatever's higher or lower. And it can be enticing to just make the minimum payments and say, hey, that's a manageable payment and I'll save my money and I'll get out of this debt later. Just be cautious on getting into that habit. And so check this CNBC article out. And again, this is from April, so they're going to have some different numbers. And they talk about how, according to the Federal Reserve Bank of New York, credit card combined balances are now 1.2 trillion, all-time high in America, et cetera. They have about a 6,600 balance rate, and they use the 20% a year. And they talk about if you just make the minimum payments on this $6,600 credit card debt at 20% interest, you're going to be in debt for 18 years. Okay. Now, let's look at a quick example here. And again, use whatever sources you want. I encourage you. I'm not telling you how to think. I'm telling you to think. And the reason I'm passionate about this is because essentially, if you're disciplined enough and you can not give in to temptations, and I'll talk about that in a minute, then you can actually get rewarded for doing what you're already going to do in your regular spending patterns. And what I mean by temptations is simply you have to not spend more than you have. So do not use the line of credit and get into that high interest cycle. And also, these buggers, these credit card providers, what they'll do is they'll keep putting this carrot out in front of you. Because once you get a credit card and you start using it and you start paying your monthly bill off every month, what do? They'll extend you a credit line and say, hey, instead of spending, say, $10,000, well, you've shown to be such a good minion and payer, we'll let you borrow, if you want to, spend up to $15,000, then 20, 25, 50, 100, whatever. My point is, use it to your advantage. Don't get enticed and don't let the teeter-totter not be in your favor, I guess is my point. So check out this from Discover. I just threw this into a Google machine, credit card interest calculator on Discover. And so we're just going to use a couple of big round numbers here. So I'm going to say the average balance is $6,000 on your credit card. You have a 20% annual percentage rate, and then that monthly payment, the minimum on that, according to this calculator you can do, is $120. So if we just simply hit calculate, you see that it's going to take you 111 months. Okay, there's only 12 months in a year, so we're getting up there in years. At your monthly payment of $120, total interest paid. So you're looking at your interest is $7,200 on that, on just the principal. Now, again, this is over. This is talking about how it takes, a decade or longer, and you're in debt for all this time. But this just shows you the power of stretching that out over time. And you may think, well, to the individual, and I've been there, when you can have that option to make the minimum payment, that's enticing. And you think, well, how does the credit card company do this? Remember, they're doing it by volume. So on the other side, the credit card, if you're just making your $120 there with the high interest payments, they're doing it by volume. So they have millions and millions of people, hopefully, in their opinion, that are using their credit cards and paying high interest to them, okay? Because that's how they collect all these massive revenue streams. And so I warn you, the more you use this, the more you're going to be enticed and you basically lingered in to get more. You have to constantly fight that. Put yourself first financially and say, hey, I'm going to use this credit card to my benefit and I'm going to pay it off every single month. Now, the reason I am so passionate about doing this is because this makes your money work for you. And I think that this is just a very simple example of when it comes to finances, you want to make as many good choices as you can because, in my opinion, the odds of the system or the environment we're in are stacked against the individual. And that's not a doomsday scenario, but listen to this perspective. And I understand that some people look at credit cards as even if you pay it off, they don't see any value in there. And I've gotten into a lot of discussions and debates and disagreements about this. And again, I'm not telling you how to think, simply to think. And let me use this example, a glaring example. Let's just say for gas and groceries. So for conversation purposes, and if you think I'm going out on a limb and using a silly example, let me know, Daniel@CurzioResearch.com. But the majority of us use gasoline in our vehicles, and we go to the grocery store and eat, okay? So gas and groceries are two easy things right there that basically everybody does. Now, you can pay for those items with cash, and what happens when you do that with cash? So you get paid, money comes into your account, you take cash out of your bank, you go to the grocery store, and you pay with cash, then what? Well, you wait to get paid, and you refill that buckle, and you refill that cycle. All right, that's fine. In the same scenario, all you're doing is paying for your gas and your groceries on your credit card. And then at the end of the month, you pay that bill off. You're doing no different. You're still buying gas and groceries. The process is simply different. In my example, instead of using cash, you're simply using a credit card. What's the difference? The difference is the money works for you and you're going to get something in return. And when you look at picking your credit card, be selfish and pick something that is good for you and your spending habits. So look at Discover and Amexes and MasterCards and all these. You get all kinds of bonuses or special perks and offers to sign up. So look at how many points you would get and what you can use those points towards, maybe hotel stays or flights. Look at the rewards you get or the cash back rewards. I know all of you guys are familiar with different Capital One credit card commercials and all this kind of stuff about saying, hey, we'll give you 4% cash back on gas and we'll give you 3% cash back on eating out. I'm using this as an example, but you understand what I'm saying. So if you plan on traveling a lot, maybe look for a credit card that gears points or rewards towards travel. That's my point. You want to be selfish, put yourself at the top of your financial list, and then use everything accordingly. Back to this example of gas and groceries. So let's say on average, you just spend $2,000 a month in total. Okay. Now I know I'm going outside the gas and groceries here, but let's just say you spend $2,000 in total. And I'll just use this goofy calculator here. So I'm going to work backwards. Here, this $720. So if you spend $2,000 a month and you get an average of, say, 3% cash back, that's about $60 a month. And if you do $60 a month times 12, you get to that $720 figure. You with me? Okay. Now, the point of this exercise is not to say $720 is a lot of money or a minimum amount of money. That's not the point. The point here is that I hope that you understand and see that you're doing the exact same thing here, buying gas and groceries or buying stuff. The only difference here is the process or the way you go about it. So instead of just spending cash or writing a check, you're using a credit card and you're paying that amount off. And for that, for doing nothing different but the process, you're getting rewarded, and that will add up to $720 over the course of a year based on this example. Again, the point is not to point to the 720 figure. My point is, if you have the opportunity to do the exact same thing and benefit from it, why wouldn't you do the beneficial route? I'm not exaggerating and making that more clear. And that's why I think if you're 18 or 80 higher, you should use a credit card the correct way, meaning you should use it, you should put your necessities, you should spend it, use your spending habits on it for a monthly basis, and then pay the Florida thing off, reap the rewards, and use them to do anything you like. That's the ultimate takeaway. And the reason I like using the gas and groceries, because that's for everybody. Now, if you want to try to figure out how to use that even more to your advantage and put everything you can on your card, and you got to look at, because again, the system is so stacked against you. You can't put all your payments on there. I try to put my vehicle payment on there on my credit card every month and rack up those points. I'm going to pay it every month anyway. Guess what? I called, gave my credit card number. They said, you know what? Your credit card, we actually don't allow that to happen. Or in another situation, because again, they don't want you to get too financially independent, what will they say? Well, if you use your credit card, we're going to charge you an absorbent amount of rate or interest on it. So I'm not saying that you can put everything, there are limitations, but my point is that I want you to think about this, think about the process of the money passing through your hands in your financial life, put yourself first and get your money to work for you as fast as possible and to the most extent possible. So with a credit card, if you're in debt, stop, get a plan, get out of debt. If you're not using a credit card, start using a credit card, pick the one that, be selfish, pick the one that's going to help you and your family do whatever you want, travel-wise, et cetera, and be disciplined. Put your monthly payments on there, or, put all your items and goods on there and then pay it off every month and then reap the rewards. Just like compounding. It takes some time, but you'll see the fruits of your labor and it'll get easier and easier. It's contagious. It can help others, and it will take away the financial stress, which is absolutely incredible. And that's the most healthy thing you can do for you and your finances, in my opinion. Remember, nobody's going to look after your finances more than you are. Nobody gives a flying Florida as much about your finances as you do, including me. That's the way it is. That's the way it should be, and you can handle it. So, comments. Love me, hate me, don't ignore me. Daniel at CurzioResearch.com. Do you agree with me on everybody using a credit card? Comments, email me. Until next time, have a great weekend. Cheers.